In this video, we're going to prepare financial statements from a given trial balance. Let's take a look at the instructions that we have here. Assume you're the accountant at GAAPQuest, a website and application to help accountants navigate generally accepted accounting principles. From the trial balance shown below, prepare the following financial statements: income statement, statement of retained earnings, and a balance sheet in the classified format. Let's start with the income statement. Let's put a heading here for our revenues. And there's going to be more than one revenue account. We see here this company has generated rent revenue and service revenue. Now let's report service revenue first, because that's what the company's doing in for its primary operations is service revenue, $61,500. Let's grab the dollar amount. I can copy and paste, but then that's going to take my formats with me. So instead I'm just going to link so that I keep my formats. I don't turn my boxes green from the trial balance. Of course, I can type the numbers in, but if I link them, it's less likely that I'm going to make an error. And then let's put in a subtotal for total revenues. Once my revenues are complete, I'm going to put a header for my expenses. And then I'm going to list out the expenses. Let's take a look first. I see my expenses here. Now the one thing we need to keep in mind is that companies do not separately report depreciation expense on their separate long-term assets. They show one total amount of depreciation expense. So let's start linking our expenses, but we know that we can't link depreciation expense in the two lines. It has to be one net amount. Okay, so I'm going to overwrite this with simply depreciation expense. Finally, rent expense, and then interest expense. Okay, then I need my dollar amounts for each of these expenses. Remember, when I get to depreciation expense, I need to change this. I need to change my depreciation expense to equal the sum of the depreciation expense on the buildings and on the equipment. Rent expense and interest expense. All right, now I've accounted for all of my expenses. I'm going to show a subtotal for total expenses. I'm going to put my total expenses here in column H, although I know that I can put them in column G. It's just a matter of formatting. I'm going to put in my sum and close up parentheses. Show my total here for total net income, and I'm going to take the difference between my total revenues and total expenses and get total net income of $29,700. Now that we've determined net income, we can prepare our statement of retained earnings. Remember, the first line in the statement of retained earnings is beginning retained earnings, or retained earnings, beginning, or retained earnings, January 1st. Remember that retained earnings, the beginning balance, is what's shown on the trial balance. This differs from all other accounts which have ending balances at the end of the period. How are we going to get our trial balance to be updated for the next period? We're going to need to book closing entries to shift all the revenues, all the expenses, and the dividends account balances into retained earnings. But for now, we start with our beginning retained earnings of $3,500. We add net income. We can either write net income or we can write add net income, either one. And then I can either say less dividends, subtract dividends, or I can simply write dividends. And then I can show dividends one of two ways. I can show it as a positive $5,000. I can either just link it here, and then when I do my ending retained earnings number and I do my formula, I just have to keep in mind that I showed the dividends as positive here, so I need to subtract them when I'm doing my calculation. Alternatively, I could show dividends here as negative. You'll see companies reporting in both formats. And we just need to think about, we just have to think about the fact that we know that dividends reduce retained earnings. And they might show it as positive, they might show it as negative, but they have to account for it properly. So whether we adjusted our formula to show that there is a negative sign here. If there's no negative sign here, then we need to adjust our formula here appropriately. Now that our statement of retained earnings is complete, we know that we can start on our balance sheet. And remember, we'll need that ending retained earnings balance that we see on the statement of retained earnings in our stockholders' equity section of the balance sheet. Let's start with our assets. Remember, we need a classified balance sheet. So below our heading for assets, we're going to put a heading for current assets. Classified balance sheet separately classifies the current assets from the long-term and the current liabilities from the long-term liabilities. All right, so let's see what we have for our current assets. We have cash, accounts receivable, prepaid insurance, and supplies. I'm going to link these dollar amounts next. And the reason I'm not just dragging all the way down is so I don't have to lose the formatting. Keep this underline here. If I had just dragged my formula down, I would have lost this bottom underline that I have. Now, once I have all of my current assets, I'm going to report a subtotal for total current assets. I'm going to put that subtotal here in column H, although I could put it in column G, of course. And I have total current assets of $37,000. I can have a header here that says long-term assets. Sometimes I'll see that for companies. For the most part, what I see, companies when they're the publicly traded companies that are reporting, they'll just go immediately after that total current asset subtotal. They'll go immediately into listing their long-term liabilities. So here I'm going to just go immediately into equipment. And while we reported the net of depreciation expense on the two types of long-term assets, we summed these two total and just reported depreciation expense. On the balance sheet, we don't do that. On the balance sheet, we actually list separately the accumulated depreciation on the equipment and with our buildings account, and then accumulated depreciation on those buildings. So we have equipment of $60,000, and that equipment has an accumulated depreciation of $45,000. I could either report this as a negative, or I can simply link it here, and I'm going to show the total net book value of the equipment as $15,000. Of course, another option is to show this as $60,000 and show this as a negative $45,000. We can or can't report that $15,000. This is just a matter of reporting. Buildings, we have buildings of $55,000, accumulated depreciation on those buildings of $45,000. Whoops, I see my equipment had a depreciation of $35,000, not $45,000. You're probably wondering that when you saw that. Okay. So then we have a net book value for the equipment of $25,000, and we have a net book value on the buildings of $10,000. Finally, we have lands. Let's link to our land account amount, land of $40,000, and then we have our total assets here equal to the sum of the current assets, the net book value of the equipment, the net book value of the buildings, and the land. Total assets of $112,000. Now for our liabilities. Let's start with the current liabilities. Remember, this is a classified balance sheet, so we separate out our current liabilities from our long-term liabilities. My current liabilities start here in cell B20 with accounts payable. So I am just going to link up to accounts payable and then drag that down. Which ones of these liabilities are current, accounts payable, unearned revenue, salaries and wages payable, and interest payable. The note payable is due in 3 years, so of course that's long term. Okay, and if I drag down and I do lose my bottom underline, and that means a lot to me, I can either add it, that bottom underline here, or I could come up to a cell like this and just format the use the format painter, paint that. Okay, total current liabilities. $8,700. And then I'm going to immediately go into my long term. It's not wrong to put a separate line subtotal for that show a heading for long-term liabilities. But oftentimes we see the companies just go directly into what those long-term liabilities are. And we see that there are two, the notes payable and the mortgage payable. Okay, so our total liabilities here, either do a sum or just say equals and add each one of those three cells. Total liabilities of $63,800. Now we're ready for our stockholders' equity section. And remember, two components of stockholders' equity, common stock and retained earnings. Common stock account I can link here. The retained earnings account title I can link, but remember the amount I can't take. The common stock amount I can take from the trial balance. The retained earnings I do not want to take from the trial balance. For the retained earnings number, I want to go take that from my ending retained earnings balance on that statement of retained earnings. Okay, I'm going to report my total stockholders' equity. $48,200, and now my final check, total liabilities plus stockholders' equity. This is where I start to feel my heart pound, my hands sweat, making sure, is it going to total? And it does. Makes it all worthwhile. Now we know that there's actually 4 financial statements. We know that we've skipped the statement of cash flows. We are going to hold off on that until after exam 1. We just need to be able to prepare these 3 financial statements. That concludes this example.